All right, welcome to day 5 of the Simply Pips Back to School for Newbies. First time ever we're doing something for newbies. Today we'll be discussing market structure. Last class we discussed the candlestick anatomy and we looked at candlestick patterns. And patterns are usually either one candlestick or a combination of candlesticks, which we use to determine, to predict what we think price will do in the future. So when we have a bullish engulfing at a specific point, we begin to assume that there is a tendency that buyers have regained control and that price might begin to buy. And when we find a doji, it tells us that there are indecision, or the buyers and sellers are basically even out, and the market hasn't made a decision yet, right? But candlestick patterns, like I said, is just one candle, or at maximum sometimes 3 or 4 candles, but most times just 1 to 3 candlestick candlesticks themselves coming together to form a pattern. But when you look at the charts in general, you see that it goes beyond just one candlestick. Sorry, it goes beyond just one candlestick. There are certain things you see on the chart. For instance, you see something like this. These are a series of candles, right? Series of candles giving you a curvy pattern, right? We call this something like the Elliott wave, right? It gives us something like this. So today we want to be able to, we've narrowed down to 1 or 2 or 3 candles. We want to put them together as a body and then analyze them. It's just like taking Nigeria. You could analyze Borno State, you can analyze Lagos or Abuja, but can we analyze Nigeria as a whole? And that's what we're trying to do. We're trying to look at the charts as a whole, right? And see if putting all of them together will tell us a story. I must state here that whatever strategy you learn is actually a story. The market sometimes can be so haphazard that you need to tell yourself a story to make sense out of the nonsense, right? Now, typically, price will do either of 3 things. It is either that price is moving vigorously to the top side, or price is moving vigorously to the downside, or that price is indecisive and is not really moving vigorously in any direction. It just moves slightly a little in one direction, then slightly a little in the other, right? We will discuss and give this these patterns a name, right? These are 3 ways that price will usually move. It's either going north or going south, or it is going to the west without, or to the east rather, without really, with no clear direction that can be spotted on the time frame of interest. Remember, we discussed time frame, whether it is 1 hour, 1 minute, or the likes. Right, so let's look at the first scenario where price is moving vigorously to the upside. When price is moving vigorously to the upside, we say that the market is bullish, right? Or we say the market is long, or we say the market is trending up, right? So when price is moving vigorously to the upside, remember, I'm not talking about 1 candle here. Neither am I talking about 3 candles. I'm talking about series of candles moving vigorously to the upside. We see that the market is, let me type that out in case my pronunciation is poor. We say it is trending up, or we say it is a bullish trend, or say the market is long, right? All of these are ways we can say price is pushing to the upside, right? How can you determine that price is actually going to the upside. How? What you need to see before you conclude that the macro structure of price, and when I talk about price, I'm talking about what you see on your chart, right? Is moving to the upside. How do you determine that? Remember, as retail traders, there are different forms of trading. You could get to a point where you become, you start using algorithms, right? There are largely two forms of trading. It's either you are trading using, they call it discretionary trading. Then we have the algorithmic trading, right? For most discretionary traders, you look at the chart, look at the chart, then draw a conclusion based on what you can see, and then take a trade based on what you have concluded, right? You need to be able to look at the macro chart and say, this is what I see. And my question is, how will you know almost conclusively that price is in an uptrend? And I'll give you one illustration, right? If this line delineates a couple of candlesticks, if the line is, if you see a line moving up like this or candlesticks moving up like this, the question is, in this time frame, can this be said to be an uptrend or not? For newbies, you may say it is an uptrend, but for more experienced traders, they'll tell you they can't say. Why? Because price moves in waves, just like as you can see here. Price moves in waves. Can you see those waves? It went up, it came down, it went up, it came down, it went up. Price doesn't just move in one direction, right, without taking a breather. It is like your heartbeat. It goes up and down, right? But men looking at what you can see on the chart, you could say that in spite of the fact that it is going up and down, it is going more to the downside than it is going to the upside, right? But price moves in waves. It doesn't just pick a direction and face that direction without taking a breather. So if you see just one line pointing upwards, you can't say if it is trending upwards. You can just say it is going up, but you can't say it is trending upward, right? Why? Because the next wave, since I say price moves in waves, the next wave could do something like this. Now, in this case, you can't even say it is an uptrend. Why? It had what we call a starting point, then it had a high, then it had a low. So you can't say this is an uptrend, neither can you say this is a downtrend. At this point, the market, from your own perspective, is confused. And when the market is confused, you should be sitting on your hands, literally sitting on your hands. So how do we determine then that the market is in an uptrend? We wait to see certain things play out, right? We wait to see certain things play out. And this is what we want to see play out. We want to see something like this. We want to see something like this. In other words, we want to see price start from a low point, then it goes to a high point, then it comes down and gives us a higher low. Why do we call it a higher low? It is a low point. B is a low point compared to A, right? Let me do it this way, so it sinks home. B is a low point compared to A. But if you look at B compared to point O, you would say that B, even though it is a low, compared to the previous low, is a higher low. You see that? Then when you look at C, it's the highest point so far, but this is also a high. So comparing C and A, you will say C is a higher high. For us to say that we're in an uptrend, we must spot out 4 points. Point 0, A, B, C. And they must give us a low, a high, that you take a rest and come down a little, and give us a higher low, then push forward to give us a higher high. Now it means the buyers are fully in control. You must have 4 points. It gives us a low, it gives us a high, then it comes down and gives us a higher low, then pushes up further to give us a higher high. Now we have an uptrend. Does it mean that the uptrend will be sustained? No, it doesn't. It just means that you've identified an uptrend. And because you've identified an uptrend doesn't mean the uptrend is going to be sustained. It could change instantly at point C and then begins to trend downwards. But again, that is the part of trading that nobody can control and nobody can predict with precision. Right? So here we are. Those are the 4 points you want to see, right? A high, low, a higher high, a higher low. You want to see those points to be able to say price is trending upwards, right? Another thing you can do is that you pick a tool called the trend line, right? You can remember I showed you how to find that tool on your MT4, right? Last week, both mobile and desktop. And then you drag that thing from point A to point C. You see that it's pointing upwards. You also drag it from point 0 to point B. You see that it's trending upwards, right? It's pushing upwards. And you can conclude that this is an uptrend. Why? It is pointing upwards, right? These lines I use are called trend lines. Now you can say this is a trend, this is trending upwards because the trend lines are pointing upwards. I've shown you 2 ways of identifying a trend. Whether it is by trend line or whether it is by market structure. By market structure, I mean the structure is 0, A, then it comes back to B. B is higher than 0. B is not lower than 0. It stays higher than 0. Then B to C is higher than A. That is market structure, right? You're looking at the structure and you're saying this thing is moving up. You can also use trend lines. Whether it is trend line or market structure, you still need 4 points, right? A line is a distance between 2 points. So you drew a line at the upper side and you drew a line at the lower side. Whichever the case, you need 2 points to draw a line. This is very, very important. When you have successfully identified a trend, and in this case, you've identified as an uptrend, then your bias going forward would be to buy. Your bias going forward would be to buy. But like I told the guys in the fostering program over the weekend, let me throw that in here. This is an uptrend. If you want to buy, where do you think will be the logical place? On what number on this wave would you think will be the logical place for you to begin to look for opportunities to buy? Anybody, please put your answer in the chat box. Where do you think you should begin to look for opportunities to buy? Anybody? Yes, basically at point 4, right? At point 0, you weren't too sure what was happening. At point 1, where it was just a move to the upside. At point 2, it formed the lower low. You weren't too sure if it was going to come back down. Then at point 3, you were certain you are now in an uptrend. You could technically buy from point 3, but the safest place to buy from will be at point 4, right? When you want to buy at point 4, there are certain things you could look out for. right? And I'm going to merge two classes together just in a bit of ensuring I have more time for other things. And I'm going to be calling back some of the things we discussed last week. And hopefully you guys have been watching the video and getting yourself acquainted with them. If we want to buy, Edodo, I hope I pronounced that name correctly. Yes, I agree with your answer. Between 4 and 5 will be a good place to begin to look for buys. If you want to go in for a buy, you could do two things based on what we've discussed. Number one, you could look for something to tell you where 0.4 will most likely be. And in that case, what type of pending limit will you have at 0.4? Anybody? What type of pending limit would you have at 0.4? Anybody, please? I'm waiting. What type of pending limit or pending order rather will you have at 0.4? You would have a buy limit. If you've been able to identify, if you find something to tell you where your 0.4 will be, you could put a buy limit there, right? You could put a buy limit there. Or, no, Edodo is not buy stop, it's a buy limit, because you're expecting that when it picks you, it makes a U-turn. Alternatively, you could say, for this to remain an uptrend, it needs to create a higher high. Remember, for an uptrend to remain true, you must have a low, a high, a higher low, and a higher high. So far, you've gotten a low, a high, a higher low, a higher high. If you want to enter, you might be thinking of entering at a higher low too, hoping that because it is an uptrend, it's going to create a higher high too. So you could take a buy limit at 0.4, or you could momentarily, or you could, logically, based on what I've taught so far. There are many ways, I'm just explaining based on what I've taught so far. You could tell yourself that if this is going to be an uptrend, then price should go above this point and go somewhat higher. So what if I place a buy stop somewhere here, so that when price comes, it picks me and it goes higher, and I get out at a higher point and make profit of this spread? If you understand what I've explained so far, if it looks logical to you, put a 1 in the chat box, please. And if I've been confusing you, put a 2. I'll wait until I get like 10 responses. Gotten 1, 2 so far. So the person who gave 2, have you watched the previous class? Have you been following the previous lectures? All right. So let's move on. So again, let's go back. The best place to look for buys will be at 0.4. And if you are a breakout trader, you would have told yourself that price will go outside this box. It will go above 0.3, and then you'll be waiting for it to break out of 0.3, and then you buy for the move to the upside, because price will continue to push up in an uptrend. Right? If you understand what I have discussed with you guys so far, I'm going to pause and then integrate candlestick anatomy to what we have discussed so far, at least for an uptrend. When you have an uptrend in this format, What I said, you could use a trend line, 2 points. You could use a trend line, 2 points. Don't mind me. The way I'm drawing it is looking very neat. In real life, it's not going to be as precise as this. You have to do some approximations. So I've gotten my points, and let's label them based on what we discussed. We have point 1 and point 2 for the upside, point 1 and point 2 for the downside, 2 points each. Right, we've gotten that. And I'm going to change the color here so I could refer to them by their colors. No, this would be green. All right. So based on what we discussed, if you were looking for an opportunity to buy based on trend lines, you would assume that when price comes around 0.4, haven't had origination at 0.1, haven't created a line at 0.2, you'll be anticipating, of course, haven't created 0.3, which was higher than 0.1, now confirming to you that you have an uptrend, you would be anticipating that when price comes somewhere around that same line. Now remember, the world over, there are millions of people trading, and they don't know that you drew a line on your chart. So your line is not actually God, and it's not sacrosanct. It just gives you an idea of where it just makes you make sense out of the confusion. So you told yourself a story, and your story is that I have identified 4 points. When price comes back to any of those points, I will expect it to react. Notice I used a lot of I there. Is you, not the market. So in essence, what I'm saying that this line may not be exact, but you are saying when price comes around this region, I'm anticipating that it's going to make a U-turn. In fact, to make it more precise, so you start having a better expectation of price, permit me to use another tool to draw that. I want to be sure which tool is that now. Something like this. Yes. So I could do something like this. I just gave a margin above and below and another margin above and below, right? So I'm expecting that when price comes into this region, I'll be looking for reasons to buy. And when price comes into this region, I'll be looking for reasons to sell. But remember, because this is an uptrend, I am not interested in selling. I'm only interested in buying, at least for now. As newbies, let's not complicate issues. You've identified that this is an uptrend. In an uptrend, you should only be looking to buy. Why? Rule number 2, the trend is your friend. You want to go in line with the trend. If the trend is bearish, sell. If the trend is bullish, buy. Why? I explained that last week. You only have $1,000 in your account. There's a guy somewhere that's got 10 million. There's somebody else who has 1 billion. If the guy who has 1 billion is net bearish, what business do you have going against him? He's going to swallow your funds and he wouldn't even know something happened. So the trend is your friend. You want to go in line with the trend. As a newbie, as you get older and you want to scalp and you get a little bit more either knowledgeable or more confused, yeah, then you can start mixing things up. So you are looking at buying at points around 0.4 based on what we discussed last week. You will now come to 0.4 and now be looking for a bullish engulfer. to tell you that the buyers have now come back, potentially. Then you begin to look for opportunity to take your trade. Or you look for signs of indecision, where it looks like the sellers are no longer fully in control and the buyers haven't really come in yet, and there's still indecision. Then you mark up that point and then you begin to wait to see who will win. If the sellers win, you wait for more confirmation to either continue to sell, meaning that the trend would have changed, or you buy. Again, without complicating issue on whether the trend has changed, we'll come back to discuss break in market structure at the, before the class ends. But today we're looking at just buying. Now for this instance, we're looking at buying. So when you come to this zone, you'll be looking for reasons to buy. What reasons would you be looking at? You'll be looking for candlestick patterns that tells you that buyers are now back in control, at least from your storyline. And then when you've confirmed that it seems the buyers are in control, then you go into buy based on the entry orders I've given you, either limits or stops or market execution. Right, let's look at an example just to help you guys have a feel of what I'm saying. Again, you guys are newbies, so I expect some of these things to look strange, but with time, you understand it better. Let's look at this scenario here, where on the 4-hour time frame, where on the 4-hour time frame, sorry, I'm not getting this, so let me just use usual trend line. You have something like this, right? You have a trend line like this, and then later on, you have another one like this. These are trend lines. So you had a trend line pushing upward, telling you that you are in a potential buy scenario. I'm drawing like 2 of them. See that? I'm going to explain what I did here. So I turned this to a line chart. I was able to pick this low and this low to give me my first point. And I was able to pick this high and this high to give me my next point. Then I went back again, I picked this low and this low to give my low point. Then I went again and I picked this high and this high to give me the next one, right? This is in hindsight. I'll show you guys how to do it in real life, but this is in hindsight, just to explain. So it's more or less like I cherry picked here. So look at what happened. Price bounced here once, bounced here the second time. When it's coming back the third time, I'm looking for a reason to buy. Based on the candlestick patterns we explained last week. What did you notice when price came toward this region? You had an inside bar, a bullish inside bar, a large bearish candle, followed by a small bullish candle, which is a bullish inside bar. And I'll go back here and show you again. Let's go back to inside bar. This is bearish engulfing. After bearish engulfing, we had doji and all of the other dojis, and then we had Morningstar, and then timber, and then other formations of thin bars. Yep. And then we have the harami, which is the inside bar. Right. So this is a bearish inside bar. Let's look at the bullish inside bar. We discussed it last week. Right. So let's look at the, see, this is the bullish harami, which is the bullish inside bar. A large bearish candle, and then you have a small bullish candle by the side. What did I say you should do when you have something like that? I said you should wait. Mark up this area, wait to see the first candle that closes above, then here you have your buy limit, and boom, price goes up. But I told you guys last week, and I remember I said it might not make sense for some of you, but I'm going to explain it. I said that even though a bullish harami is, or let me even use an engulfer, even though a bullish engulfing is a buy signal, it doesn't mean you should go into the chart and just be looking for every bullish engulfing for as reasons to buy. You want to wait to buy at some logical points. You have to tell yourself a story. You have to convince yourself that something is going to happen at that point, and then you begin to look for opportunities to buy. You don't just go and start buying simply because there's a bullish engulfing. So also with haramis. So if you come here, you drew this line. You were anticipating, you've gotten your first point to the downside, first point, second point to the downside, first point to the upside, second point to the upside. You were waiting for price to come back. When price came back here, this became a reason to buy. You got your bullish inside bar. What do? You box it out, right? And you're waiting for price to close above your box. Here, price close above your box. If you are not convinced, here, price close above your box. So when price close above your box, what do? You set a buy limit. Your stop loss is down there. Price came, picked you, gave you your TP1, TP2, TP3 up all the way to TP5. And then you won this trade. Again, I cherry picked, right? It's not that easy in real life. But this is a newbie class, so we'll move on. Right? Then I drew a second trend line. You had first touch, second touch, you're anticipating price to come back again. Price came back again. You begin to look for reasons to buy. What do you see? As price came back and approached that zone, you saw a doji. What did I say you should do when you see a doji? You box it up and wait for price to close above it. Here you have price closing above it. You get into the trade and boom, it goes up. If you prefer not to see this as a doji, then you could see this one as a bullish inside bar, for which case you got a breakout and never got an entry, but price still went in your direction. You see that? So your ability to be able to look at the chart at one time and say, this is going up or this is going down, and then you frame a logical way to get in. My biggest problem, how do I put it in past tense? In the past, my biggest problem was putting a logic to why I take a trade. Because I'm in so many Telegram groups, so many WhatsApp groups. Somebody is justifying why Euro USD is going to buy. Another person is justifying why Euro USD is going to sell. Both of them, if you listen to their justification, it makes perfect sense. And somebody's also explaining perfectly why we shouldn't even be considering Euro USD. So I just get confused. I began to see some form of consistency when I picked a storyline and I repeat that storyline to myself day in, day out on the chart, irrespective of what anybody's going to say. Why? Mr. A, who told me to buy Euro USD on Monday, won the trade, and he didn't allow anybody rest in the Telegram group or WhatsApp group. He was just shouting that he told us to buy Euro USD. Mr. B, who told us to sell, put his tails in between his hind legs. And then on Tuesday, Mr. A came back again with that same venom and told us to buy GBP USD and then we bought it, and then we lost. That simply means that Mr. A doesn't have the crystal ball he wants all of us to believe he has. It only taught me humility. When I take my winners, I take them quietly. When I take my losers, I could make some noise about it and laugh over it, just so I could get emotional comfort from other people. But there's no point coming to Telegram to shout that you made $1,000. You could lose $2,000 in the very next trade. Some of you are newbies. You might not understand. When you start, you understand why 95% of people who trade lose money. Right? So basically, that is it. So I've been able to discuss uptrend. I've been able to discuss the logic for an uptrend. And I've been able to tell you logically when you should begin to think of a buy. If, for instance, you came to your MT4 and this buy has started already. This buy has started already. And then you still, but you meaning that you missed 0.4 and you still want to get into this trade, then you could hypothetically look for other reasons to buy because you believe it is still going to go up above 0.3. You could look for other reasons to buy between 4 and 5. This is for the advanced guys, right? But then let's look for other reasons to buy. While we are still moving upwards, until we get to this line, then we'll begin to assume it may begin to come down, right? Let's look for reasons to buy. So we spotted this inside bar as a reason to buy after it was broken. If you missed that, here you are. This is a bullish engulfing, a bearish candle and a big bullish candle. Bullish engulfing. How did I say you could take a trade on a bullish engulfer? I said you could place a line. Let me change the color of that line so it doesn't confuse. Ish. I think I should just take this out. I said you should draw a line. Again, let me magnify this so you can see clearly. You can draw a line on that bearish candle. I explained that last week. Once price, this is a bullish engulfing. When price comes back to that line around that zone, you are looking for a reason to buy. Some persons call this another block. Whatever name you give it, names do not bring pips. So when price comes back into the zone, you look for a reason to buy. You've got a reason to buy. What other reason can you see to buy? You got a tweezer. Here's a tweezer. And then you box out your tweezer. And then you're looking for a breakout. Unfortunately, it didn't come back to pick you. But again, the fact is that you were able to spot a tweezer. And then you continued to spot reasons to buy until you hit that line and you say, okay, well, I'm done. I think price is going to come down a little. What I'm explaining here might be above your level as newbies, but if you keep faith with the video and watch them over a couple of times, well, more than a couple of times, you begin to understand them, and perhaps you might have a better foundation than I did coming to trading. Trade logically. Don't trade with your emotions. Trade logically. Have a reason, a logical reason to get into the trade. When you have a logical reason to get into the trade, when the logic is proven wrong, you don't find it difficult to exit the trade and accept your loss. Because you didn't enter based on emotion, you entered based on logic. When the logic fails, let's say you were planning to buy. I'll give you an example here. Give you an example. Let's say you took this as your reason to buy because you saw this bullish engulfing, and then you got in at that point, and price came back straight, whoop, and hit your stop loss. You exit the trade because your logic has been defiled. Then you wait for another logical reason to get in. If you enter based on emotions, you won't want to get out. And then one day, because you're running from losses, you will incur the mother of all losses. And that is capable of sending anyone to the village. So we're done with bullishness. I'm not going to spend time with bearishness, because everything I just said here, do the opposite for a bearish scenario. And let's quickly do one. So let's say you have a bearish trend. Again, you must spot 4 points, right? Even though I spend so much time talking on trend lines, there are other ways you may necessarily not use a trend line. Maybe I should explain the bearish scenario without using trend lines, right? I'm not going to use trend lines here. So here we have point 0 to A. We're not sure what is happening. We had A to B. We are also not sure what's happening. Then B forms C. We say, oh, we're in a downtrend now. We are definitely in a downtrend because we've gotten our 4 points. We've gotten, let me mark it out so you know how to label it. We have our high, then we have our low, then we have a point that is higher than this low. We call that, but it is lower than this high. We call that a lower high. You could put it lower high 1. Then we fall lower and formed another low, but this low is lower than A, so it becomes our lower low. You can call it our lower low 1. Then it formed another lower high. You can call this lower high 2. And then it went lower and formed another lower low, and then you can call this lower low 2. Of course, if this downtrend is supposed to continue, what we're supposed to see is something like this, something like this, something like that, something like that, something like that, something like that, right? That's what you expect to see. Continuation of lower lows and lower highs, right? That's what you expect to see. Once price has formed this lower low 1, you begin to look for reversal candlestick patterns or bearish candlestick patterns to take your trade. Bearish engulfers, inside bars that have been violated, right? Bearish inside bar that has been confirmed, I beg your pardon. Dojis with a breakout to the downside, tweezers with a breakdown to the downside, you know, all of those things. You begin to look for them at logical points. One logical point I explained earlier is a trend line, but there are some other logical points we use. For instance, in simply to spend so much time on Asia high or yesterday high as logical points for us to begin to look for reasons to sell, because those points are points of liquidity. Again, I won't explain liquidity today. So that is that for bearish scenario. Again, let's quickly see if we find an example just to drive home the point. Okay. So we saw a bullish scenario. Let us look for a bearish scenario, right? And we have one here right before us. Price came down, price moved up, price came even lower, right? You see that? Boom, even lower. Now I'm not going to use trend line. In real life, when I trade, I don't even use trend line, right? But again, it's a newbie class, so we use several things to explain. Let's assume you can't see the screen properly. Let's change the color, make it something deeper. All right, dark blue. Right, so you had this push to the downside. You see, when I say, you remember when I was drawing the line and I said a push to the downside, push to the upside. I told you it's a series of candlesticks, not just 1, 2, or 3. Series. Look at that. You had 1, 2, 3, 4, 5, 6, 7, 8 forming this down. Then you had some other ones going up. Then all of a sudden it broke lower. Now you now have 4 points. 1, 2, 3, 4. You have your end, your 4 points. Now you are almost certain that you're in a downtrend. So what will you begin to look for? You begin to look for candlestick patterns to confirm your sell, right? So once it came down, you expect that it should begin to come up a little, and then to get to a point, and the buyers will lose steam and sellers will come in. What did you see here? You saw a doji. In fact, or a bearish pin bar. If you see it as a bearish pin bar, what do? You box out this. Let me take out this so it doesn't show us the background. Boom, you saw that. So what do you wait for? You wait for a close below, and then you enter the trade, and then bam, there you are, winning trade. Again, how did you arrive? How were you able to predict that price was going to drop from this point? One, you identified that it has been dropping before, and you don't want to go and stake your meager 1,000 against the big guys. Maybe I should state it here for you to know. For price to drop with this big candle, for price to drop on USD CHF, for price to drop by 1 pip, by 1 pip, you might be expending over $1 billion, or put it better, let's put it $200 million, something like that, for price to move by 1 pip in one direction. So for price to have moved 111 pips, that was massive. It means the banks, the big institutions are the ones selling. Why should you be buying against them? Why? For what reason? Except, of course, you're a 70-year-old man. You know? So here you have reasons to sell. And if you follow the analogy I gave you, you would continue to have reasons to sell if you understand where to look for the reasons to sell. Here you had a bullish inside bar. You box it out. Did you have a break? Yes, you had a break. Anywhere inside this place is a sell zone. The price goes down. Yes, price went down. These are basics. And everything here is logical. You are not just assuming. You are following simple logic. Right, so let's leave this point and let's go to the next one. Right, the last way price moves, we say price moves in a range where it isn't really going anywhere. So you have something like this. It starts out here, goes up a little, comes back down like it's forming a downtrend, then pushes back up, then comes back down, not really going anywhere, then pushes up, and for no reason you can explain, it comes down, then goes up, something like that. You can't really say this is an uptrend or a downtrend. You can't really say. So in this case, you say price is in a range. You say price is in a range. It isn't really going anywhere. Remember, I defined an uptrend that price is moving vigorously in one direction. In this case, it isn't really moving in any direction, right? It's like price itself is confused. You have two options when things happen like this. You could allow price to make up his mind and not get involved in determining what it's going to do. So literally, you could sit on your hands, or you could adapt a strategy that helps you trade a ranging market. Again, how do you know that price is ranging? You must get 4 points, like we said before. Also, 4 points. You must get 4 points, right? So, price goes in one direction, makes a U-turn, comes back in another direction, then makes a U-turn and goes in the other direction, and then begins to come down. You say, oh, we are in a range. We're in a range, 4 points. 1, 2, 3, 4. Then you say we're in a range. Once you've concluded that you're in a range, I want you to go to the apex or to the trough. Look for the candlestick patterns I mentioned to you last week at the highest or the lowest point and box them up. It will give you a range. It will give you a range. So what do? When price comes to this lower range, when price comes here, you begin to anticipate reasons to buy. When price comes to this range, you begin to anticipate reasons to sell. Would you lose some time? Yes. Many times. So when price comes back to this region, you begin to look for reasons to buy. Would you buy blindly? No. What we use in buying, the candlestick patterns I taught you guys. You watch out for them at that region and buy. Will it, the way I do it like this is textbook, right? It's not going to happen like this in real life. It's going to happen more like the purple drawing I have up there, right? So let's say you pick this point as your range initially. Then this even went higher. You might just have to go up again and form another range there, right? And then you form a range here. So now you have regions where you could begin to look for your buys. As price comes, you buy and sell until one day you would have initiated a buy, but rather than price buying, in fact, price might have behaved like it was going to buy a little, and then all of a sudden it drops further. Boom. And then you lose that trade, right? You continue to do that. Let's go to the chart and see how this plays out. A ranging market. I'm looking for one. Okay, I think I found one here. I might find, yeah, here's one. So look at what happened. Price came here, came all the way down, came all the way up, came all the way down, and then stopped around here and moved back. So I have my 4 points. So what do? Where is the lowest bearish candle? You see that red candle? That was the lowest one. I can box it out. This candle is the lowest one. What was the highest bullish candle here? Happens to be this bullish candle. I can also box it out. So now I've gotten my 1, 2, 3, 4. When price came here, I'll look for a bearish reason to sell. When price comes here, I look for a bullish reason to buy. When price comes here, I look for a bearish reason to sell. When price comes here, I look for a reason to buy. When price comes here, I look for like that until one of these days I'll lose one of them and to move one direction. Pam, I'm done. Now, once price broke this region, what did it form? It no longer became a range. It became a trend. Then I've lost one trade. I continue taking the sell to the downside. And I have reasons here, and like that. So you see how you could look at the chart and determine when. Logical reasons why you should go into a trade. Logical reasons. Before I proceed, I want to be sure I'm communicating both to the old and the new guys here. Am I making sense at all while I take a bite before my food gets cold? Am I making reasons? Let's communicate in the chat box, please. Say something to me in the chat box. Steve, you want to say something? You can unmute yourself and talk. I can see your hand unmute, raise up.
Hello, can we hear me, sir?
Yeah, I can.
Yeah. Well done, sir. Now, good evening to everyone there. I really commend your work. But briefly, sir, I observe that the market trend is well and very, very explanatory. That I mean, from the way you are passing the knowledge across. But I observe some things. If we use a certain time frame, like 1 hour time frame, let's assume that the market now appear to be higher high, higher low, higher high, higher low. But if we now use 4 hour higher frame, it may not show like that. And if it is like that, should we now go to one hour time frame to follow to trade at that moment, so to speak, sir?
All right. I appreciate your question. And I'm sure the question is because you are trying to do what they call MTF, multi-time frame analysis, right? This is my advice for newbies. And in fact, not just for newbies, for everybody who wants to be successful long-term trading. Have a specific time frame to look for your trend.
Okay.
Then you may have a lower time frame to look for your entries. Meaning, and again, I can use Elliott wave to also explain this. You see, when I explained an uptrend, I said you have something like this. Let's say this is H4 time frame. Price is going up, coming down, going up, coming down. This down that you see that is happening here, remember, it's not one candle. It's a series of candles on 4 hours. It simply means on 5 minutes and 15 minutes, this may be happening. Can you see that? What this means is that on a lower time frame, if you look at it on a lower time frame, you'll be seeing a sell. Whereas on a higher time frame, it is a sell for the purpose of buying. So if you are trading based on H4, you will not get involved in the sell. You'll be waiting for the sell to change direction for a buy, and then you will now continue to buy. I don't know if I make myself clear. So yes, trying to wait, I know there are some strategies that wait for all the time frame to align. Those strategies work best certain months of the year when the market is trending. But the market ranges over 70% of the time. The market is in a state of rest, that is ranging 70% of the time. So if your strategy is a trend following strategy on a higher time frame, like daily, you might get very, very few signals to trade on certain asset class. So I'm going to suggest to you, pick one time frame, H4, daily, weekly, 1 hour, to look for your trends. Then you may consider lower time frames to look for your buy. In fact, there was something I promised you guys I was going to explain, breaking market structure. I'm going to explain that just to try and explain what is happening here. So look at this. We said price is supposed to be making higher highs, higher lows. What happens if price, rather than make a higher high, decides to stop here and then comes down? What has happened? The structure is supposed to be low, high, higher low, higher high, higher low. You expected to see a higher high, but it came here and stopped short, or maybe exactly at that point, or even a little higher, right? Any of them, either before 3, 5 happened just before 3, or at point 3, or a little above 3 and then fell lower. Remember, this point is supposed to be higher than 4, but it came lower. Once it comes lower, what do you have? We have what we call it BOS, break of structure, right? The structure of higher high, higher low has been broken. Once that structure is broken, it means around 0.3 and 4 and 5, there were some massive sell orders. What would we expect? We expect that when price comes back to this region, there should be possibilities for us to resume a sell trend. And if that happens, what would you have noticed? You would have seen a high, a low, a lower high, and a lower low. You see that now? Then the trend begins to continue. In fact, some people who are old in trading, they will call it head and shoulders. So they have something like this. Right shoulder, left shoulder. What they just indicate here is that you have price go up, low, it creates a higher high, then it came back and created a lower point, breaking the structure, then went back and then fell lower. Right? Again, it's Elliott wave. Everybody is just telling themselves, whether I call it left shoulder, head shoulder. In fact, I used to have a mentor those days, he calls it Batman. Whatever name you call it, it's just a story. Everything is a story, right? So for the advanced class, we normally look at breaking structure on a lower time frame to take a trade. This is what we do. When we have determined that we are in an uptrend and we want to buy at 0.4, what we do is that we go to a lower time frame and wait for a break in structure in lower time frame, meaning that buyers have resumed. Then when it comes back for that test in that box I drew up, right, we will now resume our buy. I'll give you an example again from the chart. These things are straightforward. Look at this point here. Oh, this is far away. This is December. I might not get, and this thing may not get there. Let's look at this here. Okay, great. So look at this. Remember, we've been having lower lows, lower highs. All of a sudden, we had this week here is higher than this high. So that gave us on 4 hours, it gave us a break in structure. Right? You see that? So when price is coming back here in this box, we'll be looking for reason to buy. Exactly what I explained here. We've been buying before, buying. Then price came back lower. So if it was a buy, I mean price came back higher. You will now be looking for reason. So inside this box here, we'll be looking for reason to buy. What I explained to the newbies was that you look for a candlestick pattern here and then you buy. But for the older guys, this is 3rd of June, right? Inside this box, right, you will look for a break in structure on, let's say, 15 minutes, 5 minutes, 30 minutes. So let's go to 15 minutes here and look for a break in structure. This would have been 3rd of June. I'll go to 15 minutes. Kindly mute out yourself. Right, so 3rd of June. I'll go to 3rd of June. I'll go to 3rd of June. If I got, yep. So look at what is happening. Can you see a downtrend here? Price has been coming lower, 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 lower. Then what did you notice? Let me draw it for you clearly so that you can see. You see, price has been creating lows. It went back up. It came back and created even a much lower point. It went back. It didn't create a low. It went back. Then it created a lower point. Then price came back, boom, and crossed. Once we get a break in structure here, meaning it's no longer forming lower low. That is our entry. We'll enter and begin to buy. So you can see that because the H4 is telling us to buy, we will disregard the sell on the lower time frame and buy because our time frame of determination of trend is bullish. So in conclusion, what I'm saying is this. Sorry for those of you that are newbies, some of the things might be looking like Greek, but he asked a question that looks like he's been in the chart for some months. Always ensure that you're looking at your trend from one time frame. And that time frame should be a bigger time frame. H4, 1 hour, daily, weekly. Look for your trend there. Then you come to a lower time frame to look for a reason to rejoin the trend. You are saying the big guys are buying, but the big guys will not buy without a reason. I'm tempted to discuss liquidity, but I won't. Maybe tomorrow we'll discuss liquidity. The big guys will not just be buying for a reason. The big guys will go, if the big guys want to buy on Monday, they will sell on Friday. They will allow the market to drop on Friday, then they will buy on Monday. They always do the opposite of the majority. Forex market will stop existing if everybody wins. 95% must lose so that 5% will win. Now, so live day. So if your trend on the H4 is buying, you wait for all the other people to be selling on the lower time frame. When the buys resume by breaking a structure, you resume and enter your buy. That is my answer to that question. But yes, you are right. If you look at it from different time frame, it will be buying, later on it will be selling. But look at it. If you had entered a buy, look at what happened. Look at what happened. It went high after breaking the structure. It came back. It went higher. It came back. It went higher. It came back. It went higher. Are you not seeing your higher high, higher low?
Yes, I can see it.
But can you see that it's not exactly the way I drew it on the textbook? I told you the other thing I was drawing, which was very perfect. It was like, in real life, that's not how it looks. So if you are looking for reasons to buy, where will you be looking for reasons to buy? Somewhere here. For us, this is Asia low. For us, this is Asia low. You see? And we have a method called HPLR, high probability, low risk. Right? Go back to our YouTube. By the way, if you've not subscribed to our YouTube channel and you've been attending our classes, we are not asking for one kobo. We used to have a YouTube channel called Simply Pips. It got taken down. I think we had about 5,000 or 6,000 followers. We are building this back up. It's about 1,000 plus. Go spread the news and like and subscribe. The name of the new channel, let me see if I have it up here, is 7-figure possible. 7-figure possible. And it's prophetic. 7-figure is possible. Right. So go like 7-figure possible so that 7-figure will be possible. Yep. I said it was going to be within 1 hour, 30 minutes, 2 hours. I should begin to wrap up now so it doesn't get too long and boring for you guys. But basically, if you don't have a logical way of looking at the market, you'll just be trading haphazardly. I've showed you how you can trade a trend, whether up or down, and I've also showed you logically how you can attempt a trend, a range. Did I give you guys an example for a range? Did I?
Yes.
Anybody remember?
Yes.
Okay, I gave a live example for a range. I'm going to tell you something I've been doing with Bitcoin. Let me call up Bitcoin here. So like I mentioned to the guys, I've been selling Bitcoin since around January, in fact, December, but let's say January, right? And for Bitcoin, I use either H4 or daily for my trend. You can clearly see that even though everybody is saying Bitcoin will get to 500,000, I believe so. I intend to hold some for 5-6 years, God keeping me alive. But as a trader, the way you think is different from the way speculators think. So just look at this. Just look at this. Price was creating higher highs. I want you to follow me. Along the line, price created a low. So I'm looking for sales. Where are my sales? bearish engulfing. Price came to it, sell. You see that? Massive sell. All these are opportunities to sell. All these are opportunities to sell. Right? If you use HPLR, you get them. Along the line, it looked like price made a decision, I want to go back up because it went above this point. Right? So you are looking for reasons to buy. When it comes back here, you have a reason to buy. It didn't go too far. Again, it came back here again, look for a reason to buy. Then all of a sudden it's coming back. You are looking for another reason to buy here. Then you lost the trade. Now, once you lose the trade, you begin to look for reasons to sell. It means the buyers are no longer in market. Again, this is the sell. This is the sell. Right? And with just $400, trading without risking my livelihood, I was able to generate over 5,000 in that period. Again, it's small money. What many people want to hear is that you use $400 and then you bought a Lamborghini. Unfortunately, I don't drive a Lamborghini and I don't have one. I can't even afford it, technically. Right? So, but at least if you use 400 and you generate 500, that's like 12x. I mean, it's not bad. Not bad, really. Right? So the principle I'm showing you guys here can be modified into different strategies, but there's no strategy I trade that is not logical. They are all logical. Do I win all of the time? Hell no. Sometimes I lose 5 times back to back to back. 5 times I will lose, and I'll go back and ask myself, are you sure you're in the right profession? But then when the winners come, then you forget about those of you who wrote WAEC. When you were reading and reading and reading, it looks like school is hard. And when the results came out and you had straight A's, you forgot about the bad times. So we will meet again tomorrow. And by tomorrow, I'll be teaching you guys an indicator-based strategy. I've taught you guys market structure. In fact, if maybe I should give you guys an assignment here. I want you to go to your MT4, mobile MT4, or also go to your desktop Windows. Look for 5 pairs and mark up a trend for me. Mark up a range. Go and look for 5 pairs. Use any time frame you have. Pick a line. Mark it like this. Right? And when you post it in the chart, write downtrend. Do 5. Then also go and look for uptrend. 5. Then go and look for range. 5. You might have to scan through a lot of charts. That's assignment for the newbies. It's not for everybody. How will you send this to me if you're using your laptop? Just come and type paint and type snipe. Every Windows has this sniping tool. Click on it. Click on new. Then click it and drag until it copies everything. Right? It will show on your screen like this. So you just simply right click on copy, come there, paste, or come there, paste and say uptrend, something like that, right? It's not compulsory. If you're interested, do it. For an uptrend or a downtrend, if you are using your phone, do exactly the same, just to be sure you are practicing what we've done. So tomorrow we'll have an indicator-based strategy where we'll be having something like stochastics or RSI just for startups. I don't use them, but just for startups. I use them when I was starting up. So you guys can practice. Let's have a wonderful night. Bye-bye.